Ladies and gentlemen of the crypto space, it is 11:29 on what day is it? Thursday, September 24th. Oh my goodness. Absolutely incredible how the weeks and the days they blend together when you're working from home nowadays. I'm pretty sure a lot of people feel that way at this point. Absolutely incredible. This stream, as with almost every stream going forward, is sponsored by Change Angel, non-custodial swap exchange. No deposits, no withdrawals. And until we have completely decentralized infrastructure, this is a wonderful way to do what you need to do, which is in, asset out. You're in control of your keys. No deposits. Get away from that deposits. Get away from those centralized exchanges. Absolute insanity that so many folks don't think about the reality of what they're doing. Giving people their assets. Signing away their control over their assets. Oh. All right. Welcome, everybody. Nathan's in the house. DCA, a meme? Dollar cost averaging, baby. DCA. Well, buy high, sell high, buy low, sell high. There's a lot of memes in many regards. You make a good point. You want to buy low, sell high, but bear in mind, what if you buy low and it goes lower? What if you buy high and it goes lower? There's a lot of terminology that one could use to try and understand choices and options available to them. What I like to say is protect your damn gains. You have worked way too hard to watch value decrease. You want to watch value increase. So if value is decreasing, you want to protect whatever value is there and basically migrate that value to something that is depreciating less or hopefully actually appreciating. Everything is relative. Stops in the house, SB in the house, Dave is in the house, click, RR, Captain Weber. Always a pleasure, everybody. Let's pull up the main screen and see what's going on. So a couple of tweets this morning, and bam, I hit on some people that are very touchy. People are so touchy about bubbles and corrections and they're so touchy about losses. Oy, why are people so touchy all of a sudden? I literally say the stock market's a bubble, and that's like the crypto market's not a bubble, the stock market's not a bubble. Crypto market's a bubble. It popped. We've had plenty of bubbles. What's pertinent for a market is once a bubble pops, is there still a functioning market? And that's the difference between something that's sustainable and something that's not. So anyone whom says the crypto market isn't a bubble, yeah, no, that's wrong. There's plenty of bubbles. This was a massive bubble. We've had things up 1100% that came crashing down, but the assets are still very functional and they're still being traded substantially. So a bubble does not diminish the viability of a market, nor is there anything wrong with saying the stock market is a complete bubble. The gains are extremely deviated from the moving averages, and that's what a bubble is. A bubble is basically substantial deviation from moving averages, in my opinion. I think that's a relatively reasonable, sensible statement. And Tesla's a wonderful example of a bubble, and all of them are bubbles. Apple, Facebook, Google, so on and so forth. And I expect this value, these prices to come back down towards the moving averages. Now, these are three moving averages. Therefore, they are three price targets. And there's nothing unreasonable with these statements or these observations. And you could do the exact same thing with the Apple stock, except I just have absolutely no interest in buying Apple. You have to buy things that you actually have interest in. Can't spread too thin, can't go all in, so you have to pick things that are actually conducive with ideas that are enjoyable and consistent with your personality. And Tesla is. This is consistent with things that I think about, the energy narrative, the transportation transformation narrative. So I like that, and that's what I want to invest in. The thing is, I want to invest and get a goddamn good deal on it. So nobody in their right mind should invest this far separated from moving averages. and these are moving averages on the 1 hour, the 4 hour, the daily, and the weekly. So we're far off base, guys. We're in bubble territory across the board. What's fascinating, what somewhat I try and not get defensive with these people, but it's awkward. Look at this. Look at this. A massive bubble correction. You think that started in crypto? No. Bubbles happen everywhere. What do you consider a massive bubble correction? A massive bubble correction is when you have a substantial deviation from the moving averages. That's it. And then you come back closer to the moving averages, and then you expand again. That's what a massive bubble correction is. And I'm using Tesla to show how Tesla substantially deviated from the moving averages. So, well, yes, a smart guy in that I could draw this chart. If that's what he means, this is a smart chart. I'm identifying these moving averages and how far deviated from them we are. So I guess thank you, the old barn. Thank you for saying that. You are predicting how many years of a bear market? No, I didn't say any of that. I said we are deviated from the moving averages, and we will correct to the moving averages. A bubble correction. So clearly, I don't know what this person with 590 followers is really thinking. Very strange. The opinions and the sentiment. Again, is it hostility? Very awkward. Simon in the house. Always a pleasure, brother. Look at you joining, seeing what's going on in the channel. Barry says protect your gains like you protect your ass. You're damn right, man. You have to protect your gains. If an asset is going up, you need to sell on the way up. If an asset is going down, you need to sell on the way down. You need to protect your gains and accumulate value in a denomination of your choosing. Now, the odds are you want to accumulate in a denomination that is very large, has substantially more market cap. And the go-to obviously is going to be Bitcoin and to some degree Ethereum, albeit Ethereum is more volatile in some regards than Bitcoin. It clearly has an entire ecosystem, whereas Bitcoin is a little short on ecosystem and definitely has a substantially different macro narrative. Ethereum being the global supercomputer versus Bitcoin being the global store of value, the new gold. So these are considerations. I would assign more potential volatility with Ethereum, which means more potential upside as well as more downside. And my narrative with regard to Bitcoin is more of a defensive position. That's more of potentially less gains as compared to Ethereum. Over time, of course. And these are just very speculative statements. And, in the next couple of months and years, we'll really find out which is more volatile, which has more upside. And then in hindsight, we'll say it was all obvious because that's what we always do. Hindsight, 2020 hindsight. It always makes so much sense the way things play out. Ain't that the truth? All right. So today's topic is when to DCA versus when to protect gains. So, if you scroll back down, if I scroll back down, a lot of folks were very defensive for RSR, which is Reserve Protocol, which is a very good protocol, which is very comparable to MTA. And this is basically an aggregate stablecoin. So you're able to get away from potential uncertainty associated with a particular stablecoin and have a diversified basket of stablecoins. So there's great merit in Reserve and MTA, but the assets are getting destroyed. So this comes back a lot to like the DigiByte community as well. A lot of folks love to DCA, and there's nothing wrong with dollar cost averaging. But if you see right here, 61% to the downside. So sure, you could dollar cost average all the way down, but that's brutal, guys. And this really is the point of today's topic. Do you DCA or do you protect your gains? I mean, who wants to see if you put $100,000 into this and you lose 60 grand? That makes absolutely no sense. Come on, even if you're an investor and you believe so much in Reserve Protocol, you're gonna lose 60 grand over that? That's not rational. You need to protect your gains. Now, bear in mind, like here, if you're in this trend formation up here and you're bouncing around and you get to the bottom of the trend formation and it bounces up, sure, DCA all you want. Dollar cost average, you're buying at a cheaper price, but it's going to go back up. And it's going to bounce off the top, bounce off the bottom, and then finally break out somewhat. Oop, 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 and then it breaks out. And that's, in a relatively bullish type of market, that's the performance you should expect. A little bit more of a bounce to the upside, not so easy to draw with that pen. But that's when you DCA, and then this is where you protect gains when you have a trend violation. Now I know a lot of folks don't chart, but man, the only thing that I can think of is money's on the line. So either follow some of the charts or start drawing some lines. There's absolutely nothing special about drawing this line. I mean, literally all I did was draw a line against the tips at the bottom and find the triangle pattern. So either you'd start drawing a couple of lines, or you watch me, or you ask for me to draw some lines on a chart. But this is a very, very obvious place to protect gains, because it broke a trend. Now, these trends come in triangular formations predominantly, and that is the nature of these charts and trading. And a good part, probably the vast majority of meaningful technical analysis is triangular trend formations, pinching, compression, upward momentum, downward momentum, no doubt. But come on, this was a great place to protect gains. Why? Because of the statement that I have made many times: quick to sell, picky to buy. You have this trend formation, it deviates, you sell. And then what do? You wait for a trend formation. You wait for a trend formation. Wait for a new trend formation. And then you reassess and you wait for a great opportunity. Look, this is a great setup. This is called the falling wedge. This is a bullish pattern. The odds are this is going to break to the upside. So this is a perfect place to be picky to buy. You wait for a breakout, you wait for a retest, and then now you have confluence, which would be a resistance flip support, and then you have a breakout. So what I would do is buy right around here, right past the bounce off of the previous resistance, flip support. And now you have confluence that you're not going to go lower than this previous resistance. Now bear in mind, Uni did that. So I'm not too much, well, yeah, here. Was it further back? Yeah. So check this out. So this is a perfect falling wedge breakout example. So bear in mind, I'm not too much of a fan of falling wedges because this happens often. You come out of the falling wedge a bit sideways, and that's what happened here. So here, look, let me compare the two. Move it over. So here's your falling wedge, and here's your falling wedge over here. So it breaks out. It comes back down. It doesn't really hit support and then continue up. It kind of goes sideways. So this is just a very weak breakout from a falling wedge. And this is not very bullish. So bear in mind what I drew here would be much more bullish. You want to see upward movement. So it's not just a breakout. You can't just have a breakout from a falling wedge to the upside. You can't see a 5, 10, 15, 20% rip to the upside and think it's safe to enter a position without risk. And the whole point of these lines that I talk about is to minimize risk, because you want to take money and make more money and have the odds substantially be in your favor. If you could get it right greater than 51% of the time, you're going to make more money than you lose, which means overall you're going to make money. Wait for confirmation. Wait for confluence. Be picky to buy. Why? Because if this is not a good setup, there are plenty of other good setups. Look, This is clearly a previous resistance now flipped into support. So Link has stayed within trend formation, has remained bullish above the 200 EMA, which I believe is on the 1 hour, and has broken back above the 200 EMA on the 30-minute chart. So this is good. This is very bullish, and the odds are this is going to head towards back up to the previous resistance. So you could easily, if you were a betting person or trading person, you could probably squeeze, a good 15, 20% out of this trade. You buy here, and if it goes back down, well, like this, watch. So if it goes back down, and you see if it falls through. If it falls through support, you exit the trade. Quick to sell. But look, if it bounces up, now you hold it. And then it goes boop, boop, boop. Now you're in the profit, now you're in the profit, now you're in the profit. And watch. You watch for higher highs and higher lows. You see those higher highs and higher lows there? Because if you get something like this, now you're changing the trend direction. If you get a lower high and a lower low, the odds are you're not going to have continued appreciation. Now, it's all about odds. It doesn't mean it's not going to go up from here, but you still want to exit the position because the odds are it's not going to go up. You want the odds to be highly in your favor. So you exit here, probably somewhere around there, and you lock in 10% gains. Or bam, it gets to resistance. This is where, if it gets to this resistance, I'd probably sell a good half my position, 3/4 of my position, because the odds are, I mean, let's zoom out. Let's check it out. Oh, I'm making a mess of the chart. Let's zoom out to the 4 hour. So this is an absolutely massive falling wedge with pretty much 3 hits. I don't really know that's clearly a deviation from trend, but there's definitely 3 hits in most regards. The odds are this is going to fall back down because this is just huge. And there's a long way to go. This thing just went absolutely parabolic. And if this isn't a bubble, and if folks didn't see that this is the bubble, come on, this is a bubble. And Chainlink is a big deal. It's a disruptive technology that's going to be a significant part of smart contract software automation in the coming years and decades. It's an Oracle solution that provides meaningful real world data directly into smart contracts during execution. And that has nothing to do with the price. And that's what people in that get so emotional, like those people I showed you at the beginning from Twitter, they don't understand. They see these bubbles and they think that has something to do with the technology. And then they get so emotional as well with Tesla because they see these charts and it's up so much and they're correlating that with the company. And there's absolutely nothing whatsoever to do between this price action and the company. And, it's unfortunate. You can't trade angry or emotional. And so many folks, and look, Ross likes it. So Ross has liked the things I've said before in the past, and he's liked the things I've said recently. So Ross is one of the biggest Tesla fans, and I am one of the biggest Tesla fans. Just because I say the price is going to collapse 70% doesn't mean I don't love the crap out of the company. I just look forward to buying it at a 70% discount, which is much more representative of the fundamentals of the company at this point in time. All right, guys. Folks got to stop lying to themselves. You got to be honest with yourselves in order to win. Joey says, start talking about that DGB life. We want to hear some DGB. Let's talk about Digibyte. Let's see where the chart is. So look, it's right there on the 200 EMA, pretty much of the 4 hour. This is a very defensive position. If this falls through, it's going to go easily to the 200 EMA of the daily. Actually, it bounced. Look at that. So that's even better depictive of what's going on. It bounced right off the 200 EMA of the daily. 200 EMA is my favorite average. Absolutely incredible how things line up with the 200 EMA more often than not. So it's also sitting on the orange line, which is what? What the heck did I draw there? No, it's not the hourly. It's kind of the 4 hour. Right now, if you see that, the price is pretty much pinched between the 200 EMA of the 4 hour and the 200 EMA of the daily. It's pretty much pinched right in between. So, I have my perma bag. And listen, it's a lot of trading is subjective, or a lot of a portfolio is subjective. So this whole point of this stream today, the whole topic is to dollar cost average or to protect gains. And there's no reason you can't do both in a portfolio. There's no reason you can't have particular assets where you DCA. So I'm not dollar cost averaging into Digibyte, but I have a position, a long-term position, because I have a long-term belief in what the technology is likely going to be and the part of industry it will participate in the future because of its protocol properties. So that is the justification I have to hold the position in the face of price depreciation. Now, bear in mind, I don't know, I don't really want to sit through another 60% drawdown. So there's probably, I don't know, because frankly, it's also annoying for me to liquidate non DeFi assets because you either have to go through a non-custodial swap exchange like Change Angel, which is just it's not nothing overly sophisticated at all about going through that process. It's just it is substantially more to it as compared to a double click on your ledger to interact with the DeFi smart contract. So I also use that to as justification to remain hands off and to not look at the position as it goes up or down. That's my Digibyte story. I don't see any reason to fret unless it breaks this 200 EMA on the daily to the downside, which really held us support, which is a nice correction, which means things get to start over. Because clearly, look, this is a bubble. It's a little bubble. Look how far deviated from the average. Now, if there was something like this, a more subtle growth where it's hovering around the average, that's healthier. And that's not what's occurred with the cheap money, the easy money, and the irrational investing. The and this is very prevalent in the crypto market because most folks don't know what they're doing, and this has become very prevalent in the equity space. Look at the deviation. Here, look, this is the weekly 200 EMA is all the way down here, guys. This thing went straight parabolic. You see the white line? There's no justification whatsoever for this asset price to be up here. It is so far deviated from anything even remotely reasonable. And this has nothing to do with fundamentals. We're literally talking technicals here, boys and girls. The technicals say this thing is overpriced. Now, technicals override fundamentals almost always. Anyway, uh, Luke says, "Hey Noah, thanks for the great info considering L2 solutions. Yeah, like Loopring. There you go. Loopring, Matic, and XDAI. TVL and XDAI. Yeah, the XDAI has been moving. Is L2 needed to fuel a bull run? Listen, everything is straight up risk off right now. And what is a bull run? If are you talking about irrational exuberance? Are you talking about another bubble? Because that's what most folks mean when they say a bull run. Most folks mean stuff like this that you see across the board, whether it's Lens, Link, or even Ren. This is insane appreciation, and it's not sustainable because it's extremely deviated from the moving averages. So, a bull run, if you really want a bull run, if you want irrational exuberance, you got to be prepared to liquidate and protect gains. And the appropriate time to liquidate, if you were trading Ren, is on the way up 1%, 1%, 1%, 1%, 1%, 1%. And then at the top, you liquidate 50%. You got 25% left of your portfolio. You sell it on the way down, sell it on the way down. It starts going up, selling, selling, selling. And then hopefully you're out at the top. So you have to sell on the way up. If you start seeing this white line, a 200 EMA, on the long-term time frame start to deviate from the price action, you are in bubble territory, ladies and gentlemen. And what happens is exactly what's going to happen at some point. It's inevitable in the equity space. It's going to correct back down. Unless they start printing fiscal. Now, bear in mind, if you start seeing Congress talk about another couple $1 trillion injected into the markets, and primary dealers and banks and so on and so forth getting access to that capital, then you could easily see just exponential and just technicals becoming irrelevant, which is basically what you got here. This is basically what you got here, ladies and gentlemen, where technicals mean jack shit. And no, here, look, you went from 81,000 in January 2nd of this year to 504,000. So yeah, can you imagine seeing the Dow do some moves like this? Yeah, they've destroyed. This is printing. It's straight printing. Um, and that's what we've seen in the stock market. And yes, I use Tesla to represent what the insanity we've seen in the markets, Mr. Whoever said that earlier, Mr. Investor. Here's a look. Good luck fighting the Fed. Folks are so angry and frustrated, man. I will not fight the Fed. I'm not fighting the Fed. What is that? What does that even mean? I'm not in this. I wouldn't own this. I'm not fighting the Fed, but if it drops 70%, I'm going to buy the crap out of it. I want a deal. I want to buy it at a good price. So what does fighting the Fed mean? Folks have strange opinions and just really lack a general cordiality and a capacity to communicate with logic and reason. Very awkward human beings. Lewis, my 401k is all in cash. Cash means you are liquid. Cash means you could find good opportunities and deals. Cash means you have choices. So bear in mind, maybe not all cash, maybe a little bit, 5-10%, gold, silver, miners and streamers. I don't know. What's the magic sauce, the magic ingredients to a perfect portfolio? Who the fuck knows? I myself am not cash in my retirement accounts. I have almost no equities. Well, I do. I have the miners and streamers. You know, Barrick, Newmont, Wheaton Precious Metals, and Franco Nevada. Those are the four equities, and those are gold miners and streamers. And physical gold in the IRA, which is in custody, obviously, with my brokerage firm. And that's a good portion of my retirement account. It's just hard money, and it's just going to appreciate over time, especially as the dollar is strategically devalued. No gold or silver options in the 401k. Not familiar with such instruments. I'm not a fan of leverage. I don't like leverage much, my friend. What's a decent valuation for Ren? Ren is being freaking destroyed, guys. But Ren, their target valuation reminds me of like the target valuation of Digibyte, which is a thousandth of a Bitcoin. So, which puts Bitcoin Digibyte's supposed to be at a good valuation right now, if you know what I'm saying. So that's what Jared Tate has always said is a thousandth of a Bitcoin, particularly because there's 21 billion versus 21 million max supply for Bitcoin. So a good valuation per the security model of RenVM, there should be 3x value in custody. Ren, the price of Ren should be 3x value in custody, or the price of Ren bonded securing the dark node should be 3x the value in custody. So, we could do this here. So 2 6. So Ren should be about 5 times, give or take, its current price per the security model. So there's no real that I would say that's fair or stuff like that. What is a decent value? That's what I would say is a reasonable valuation, or that's a targeted valuation. You could definitely say that. A reasonable valuation is probably not where we are. This has been beaten up heavily, guys. Um, and frankly, it's fallen through the 200 EMA on the daily. I would say Ren doesn't deserve the fall through the 200 EMA on the daily. That's too far oversold. It just shows you how irrational the markets can be from a technological perspective. This is one heck of a functional use case. It just really shows you how the asset was treated speculatively. People were not buying it for its technical use case. They were buying it because of this irrational exuberance and this massive blow off, double blow off top. And just, what a bubble. Incredible. Uh, what about low and mid cap where purchase and sell push price around significantly? Yeah, so there you go. That's risk. It's huge risk. And this is why, no one's going to throw a well, Uni's actually got a relatively large market cap, but you're going to throw 100 grand into something that has a $10 million market cap, you're going to be in for some serious price volatility. 10, 15, 20, 30% price swings are going to be nothing. And I don't want that. Maybe some people do, but everything I talk about on the stream is minimize risk, maximize reward, protect your damn gains, grow your wealth, diversify the shit out of your portfolio, and really use logic and reason. And don't gamble. Don't gamble. Stop gambling, everyone. Um, Lewis says, Red, one heck of a use case driven up too far by pure speculation without understanding the technology. But that's a lot of all this crypto. There's some little tit for tat that folks have been coming at me with on Twitter. No, most people don't understand the equities market, let alone the crypto space. They hear bubble and they think that that is a fraud or a scam or a Ponzi, and that makes no sense. It's not applicable and not pertinent. It's not even accurate. It's not reasonable to call even a shitty equity or a shitty crypto a Ponzi. BitConnect was a Ponzi where the funds received were used to pay out new people to come into the space. That is the definition of or the functionality of a Ponzi. There is nothing Ponzi about what has occurred in the last couple months in the crypto space and what is occurring in the equity space. This isn't a Ponzi. This is a rational exuberance with the prices extremely inflated, and there is a higher likelihood than less that there'll be a correction to more of an average. And that is the definition of a bubble, where things are irrational and they start to get rational again. Now, the Fed, don't fight the Fed. He was right, because the Fed could easily keep this thing inflating by juicing the market with another couple $1 trillion. Barry says Bitcoin pumping like crazy. Let's take a look real quick. Oh, look at that. Right through the 200 EMA on the 1 hour. That is a hell of a rip right there. Damn. 10,700. Look at it. Well, man, if this thing breaks, if we get a breakout, let's take a look at something real quick. We're going to end the stream, but let's look at the DXY. Oh, that's why. Ay, ay, ay. Stupid. The DXY is the wrecking ball. This goes down, everything goes up. Hey, here, let's check it out. Watch, you're going to see all the green. Oh, big, whoa. I'm surprised. Oh, NASDAQ's green. Look at the green. There's nothing to it, guys. It's just, if the dollar is down, everything else is up. If the dollar is up, everything else gets crushed. So if you look at, here, let's go on the daily real quick. You want to see the crypto correction? Is basically this. How sad is that? Here's your crypto correction right here, ladies and gentlemen. Here's our big rip to the downside that we've experienced. Is this tiny little movement right here. Basically the month of September. So you're staring at the thing to blame for Ren being down what it's down, ladies and gentlemen. All right, 12:03 on a Thursday. It's always a pleasure. Thank you, everyone, for listening to me. This is the best time of my day, and I really appreciate the company. It's good. It's good to have an ear. Thank you. Thank you, everyone. I wish you all a wonderful day. We're going to have another hot topic tomorrow because that's the way we do things around here. Y'all have a wonderful day. Peace.